What's going on, everyone? This is David here with Free to Be, and today I'm going to basically kick off something that I've been wanting to do on this channel for a while, and that's basically starting a portfolio where we grow wealth together. And I wanted to basically do these in a series where every time I did a live, I would basically contribute $100 of my own money to a brand new brokerage account and share with you my strategy of how I invest that $100. Now, each episode that I do will correspond to a new $100 being invested. So if you catch this on episode 10, for example, know that my portfolio's, investment up to that point has been $1,000, and then everything after that is going to be returns. So basically, hopefully this will help you guys see that it is quite easy to get started investing. If you take the right approach and diversify and invest in the right things, you can build a portfolio relatively quickly that will grow. But I do also want to preface by saying I am no way a financial consultant, and this should not be viewed as any kind of financial advice. You guys should seek that independently. This is for entertainment purposes, but also to show you my pursuit of financial independence and how you can actually grow a portfolio starting with as little as $100. So without further ado, let's jump right into my Robinhood account. And I'll be using Robinhood for a few reasons. First and foremost, it's a very easy platform, very intuitive, and a lot of people can have access to it pretty easily. Now, if you don't have access to Robinhood, I do have an affiliate link in the description. If you click on that, you'll get a free share of stock, I'll get a free share of stock, and you'll be on your way. But basically, one, Robinhood is easy to use. Two, it has a lot of great tools for research. You can also invest in crypto markets, and it really just gives you a pretty decent way to dabble in investing if you're relatively new. It lets you easily transact. It lets you easily transfer in and transfer out funds. And it lets you buy fractional shares. With a lot of traditional brokerages, you don't get the opportunity to purchase fractional shares, but Robinhood actually does allow you to do that. So that's basically why I chose Robinhood for this. You can call it an experiment if you will, but really this is me trying to show you guys that I can grow a portfolio. You can grow a portfolio with as little as $100, and we can see this growth happen together. So I plan to, release a video like this maybe once every other week, maybe a few more times, than that. I'm not exactly sure what frequency I'll be doing it, but hopefully at least 2 or 3 times a month. So if you want to get alerted on those, make sure that you're subscribed and turn on those notifications so that you can see these videos as they come along, and maybe even join for some of the live sessions. I'm more than happy to answer some basic questions if I can. Again, I am by no means a financial advisor or financial consultant. I'm not providing you with any financial advice here, but I am just going to give you some general understanding on how, to get started and what my approach is, my personal approach for investing. So if you can see here, I have loaded already $100 into this account. This is a fresh account. There's no balance other than this $100 of cash that I've loaded on to the platform right now for my first initial investment. And like I said, every episode that I do, every live stream will be another $100 invested. So if you do catch this on episode 6 and missed everything up to that point, one, you can go back and watch those. But by episode 6, my actual investment will be about $600, or it will be $600. And then if you see that portfolio is worth $650 at that time, understand that basically, that $50 is gains on the $600 investment. And so that way you can see how fast this grows. Now, one more thing, investing in the markets is by no means a get rich quick type of venture. It's something that you have to work at over time. It definitely takes some patience to watch those grow, and you have to stay fast and true to whatever approach you take in investing. You can't panic buy or panic sell at any time. The best way to invest is slowly over time. That way you're cost basing, your cost dollar averaging all of your investments to a pretty good level, and that's basically it. So the first step, again, going to be to get started. So if you don't have a Robinhood account, go ahead and click on the link in the description. It is an affiliate link, but it will get you on your way. Now, once you've loaded the money on Robinhood, the best approach to take is to use the tools that they have. So if you scroll down a little bit on this page, you'll see that they have some news. They have some other information here as well. We'll close this. We're going to look at the main page. So we're going to click on the Robinhood page. And what we want to do is we want to get an idea of, some of the different things we can invest in. Now, I have $100 that I'm going to invest today. So I want to divvy up this amount in, a few different categories. So 10% of this amount will go towards, a crypto investment. 20% will go towards something that's a little bit risky. 30% of that will go towards your, classic blue chip stocks. And then the remaining 40% will go towards ETF fund. That is probably an ETF Smp fund. And what that is basically invests in the S&P 500 equally, and as stocks and companies go in and out of that S&P 500, it adjusts accordingly. S&P funds have been known historically to be the safest investment that you can make. Obviously, blue chip stocks and companies that have been around for 20, 30, 40 years are another safe way to invest your money as well. And then sometimes you want to take a little bit risk with your portfolio. Again, that's going to be up to you on how you decide to allocate your investment, but this is the approach I'll take. 40% of my investment will go into an ETF, an S&P 500 fund. 30%, like I said, will go into one of those blue chip companies. 20% will go to a riskier investment, and then 10% will go into cryptocurrency. So we're taking a look at this cryptocurrency here, and we see, Bitcoin has been going up. They've all been kind of rallying right now. I'm really interested in Ethereum, and I want to go ahead and invest my first $10 here. So I'm going to select Ethereum, and when it brings me over here to this, Ethereum page, I can kind of see the price over here. That's really not relevant to me right now because, again, this is a pretty volatile market, the cryptocurrency market. You see ups and downs, and, it does take drastic, hits here and there. But overall, I think, it could pay off. So we're going to invest $10 here. So we're going to go ahead and enter that in. We're going to review this order, and we're going to submit this buy. So now we have $10 or 10% of our initial investment in Ethereum. So we're going to go back to, there we go. So we're going to go back to the home page here, just to bounce over here. Now, typically on this home page, we do see some other resources that give us information about various markets. I don't see that here, so we're just going to go into the next company we want to do some research with, and we're going to go look at Apple, because that is a company that is a blue chip company, a blue chip stock, been around for a long time. And if you can look at this chart and take a look, you can see that past 5 years performance has been strong. Past year performance has been strong. 3 months, it's been a little rocky, but that's just because the overall market's been a little bit rocky over the past 3 months. Same if you drill down a month and a week. But if you look at the 5-year graph, that's where you're really going to get the most and best information. So we're going to go ahead and purchase $30 worth of Apple. Now, some of these stocks that you purchase, or some of the funds that you might purchase into or buy into, will pay out dividends on a quarterly basis, monthly basis, whatever the case may be. When you set up your Robinhood account, I do recommend you select as an option automatic dividend reinvestment. This will just allow that dividend to roll in. They call that drip. You let that roll back in and purchase additional, fractional pieces of the company you're invested in. So here for Apple, we're going to do it again in dollars. You can do full shares if you want, but again, since we're doing $100 at a time, we're going to do it this way. So we're going to go ahead and invest $30 in Apple. So we're going to go ahead and review this, and we're going to hit buy. And so that is now complete as well. Now, again, pointing out this is after hours, so a lot of this information or a lot of these transactions that we'll be putting in will not go into effect until the markets reopen tomorrow. So I might do videos here and there that also basically show you the progress after the trades have been executed and see what the market's doing. Again, if you haven't done so already, make sure you subscribe and turn on those notifications so you don't miss any of these lives in the future and the follow-ups to this series. So this is exactly where I wanted to go. So if you go down to Apple, again, if you're looking at something new that you're not familiar with, a lot of great information on Robinhood. If you scroll down, you could see what analyst ratings are. Right now, it's pretty strong on a buy rating for Apple. 20% say hold, and 2.3 say sell of the 44 ratings that they're aggregating here. Here you can see some of the earnings information. If you scroll further back to the top, you can see what the dividend yield is. You can see kind of the market cap, the high, the low, 52-week high, 52-week low. You get all that information that you need right here. So we're going to, from this Apple page, now that we've purchased our $30 worth, we're going to jump into right over here. This is a related list. We're going to look at the 100 most popular stocks right now. And if you see, Apple is right at the top. This is a good place to get some ideas on what you might want to invest in, but do be aware, because certain things like AMC might not necessarily really have legitimate value, but it is in the top 100 because of everything that was going on with the AMC stock a year and a half ago, a couple of years ago, and last year. But you can pick out the ones that are here and have some longevity. You see your Apples are going to be over here, your Microsoft, Amazon's a good one, Disney. These are all going to be, blue chip stocks that you might want to explore and ultimately invest in. So again, you're looking at the 100 most popular. You can filter this. And let's see if we can see more lists on here. We can't see any more lists, but if we go down here, we can see some additional information as well. Now, there should be a way, and I don't know why my homepage is not showing this, but the homepage should show me basically additional lists. I don't see that right now. But we are going to now go and look for a fund to invest in. Now, Schwab is one that I am pretty familiar with. I've invested in this fund in the past. This is a broad market fund, and we're going to take a look at that. But before we invest, I want to see if they have that list information down here, and they do. So if you go over here and you look up the indexed ETFs, you will see a list of various index ETFs that you can go ahead and invest in. So take your pick, do some research, pick any of these. These are going to be relatively low risk investments as compared to other investments you might make in the market. Just make sure, the index is, obviously tracking like a Smp 500 or something like that. And that way, a majority of your investment is safe. You know that overall it's going to trend positively. So we could take a look at a few of these charts so that you could see what I'm talking about. So if we look at this one right here, this SPDR portfolio Smp 500, we're going to pick this one here. And if you see right now, it's been relatively level, but if you look at the 5-year graph, it's trending up. 1-year graph trending up as well. We can go back and look at another one. Scroll down here. Let's go back to index ETFs, and we can look at any of these other ones. We can look at the Vanguard VT here. This is the ticker symbol. Again, relatively flat over the past day. Week has been a little bit up and down, but here over 5 years, it's still going up. 65% increase in 5-year period. So most of these are going to give you approximately 8 to 10% return on an annual basis. So you can't go wrong with any of these. I'm going to go back to the index ETFs here just to see if they have an iShares one. Yeah, iShares is another one that I have invested in the past. Again, the day it's been flat, the week you see a little spike, but if you go 5-year, again, it's going to be a positive increase over a 5-year period. And again, this one, if you can see here, over 5 years, a 53.2% return in that period. So I'm going to pick the Schwab Broad Market ETF for my purposes. And here I'm going to purchase $40 worth. So we're going to go ahead and review this order, and we're going to go ahead and submit it. Okay. So that has now gone through. And if we go back here, we can see that we have $20 left in our purchasing power. This has a drop off only because we've put in these, trades after hours. And now we're going to look at the last thing we might want to invest in today. Now, your holdings will be here on the right-hand side. You'll see we have less than a share of Schwab. We have less than a share of Apple. And this is how much we hold of Ethereum. It'll break out stocks and cryptocurrencies. So now we want to invest in something that might be a little riskier. Now, riskier investments are going to be things like pharmaceutical companies, maybe recently IPO'd companies, companies that might have some potential if things go their way, but they haven't had any proven track record in the market yet. So because of that, I am aware of one such company that could be something that in the future might produce some results. This would be like pre-pandemic, Pfizer's, Novavax, any of those companies that were in the industry to make pharmaceuticals or any kind of vaccines. Those would have been companies that you could have invested pre-pandemic, and they would have really paid huge dividends, or even early on in the pandemic. And as they got their FDA approval, those companies kind of skyrocketed in terms of stock price. The one that I'm going to look at is a surgical company that produces certain solutions that help conduct surgeries. We're going to invest the remaining $20 in Vicarious Surgical. This is a speculative, investment, but hopefully it will yield some results for us in the future. Now we're going to look at the chart here. I think this is a newly traded company. I think only went public last year. We could take a look at the 5-year. It'll give us a flat line of when it wasn't public, and this is kind of when it went public. Right here, listed on September 4th. Before that, it was not listed at all. Here, you can look at the 1 year. Obviously the IPO price is going to be way higher, and it's going to have a drop off 6 months after. But I think we can get a good value here on this one, even if it ends up going back to this $10 range. We're buying in at $6.13 right now. So there is a little bit of money to be made. And again, if it drops off lower than this, the next time we come about and we want to purchase some shares, we can just buy some more, and that'll drive down our cost basis. Likewise, if it shoots up, we buy some then, it might adjust our cost basis. But overall, you're averaging it out. Now, that's probably the best and safest way to invest. I really don't recommend anyone investing everything they have on one day. That's just not a real practical approach to investing in the stock market. So I would never do that. Again, if that's something you're inclined to do, then by all means, I'm not one to stop you. I'm not really here to provide any kind of legitimate or real financial guidance or advice, but that's just something that I would do, or the approach I would take with investing. Little bit, kind of over time. And then ultimately you'll end up, I think, up as a result of that move. So here we're going to go ahead and purchase our $20 worth, and we're going to review this order. And we're going to go ahead and make the purchase, and we should be done. So if I go back to the home page, we'll see that all of our transactions now appear on the right of the screen. And then we'll see, obviously, the cryptocurrency it's going to be in its own little bucket. Now, if there were stocks that I came across that I didn't want to necessarily invest in today, but I wanted to track in terms of price, let's say Microsoft, for example, I could pull Microsoft up and I can add them to one of my lists to watch them. And if I just go to add list, you can go ahead and add this to your list. Now, when you go back to your home page, you're going to see that Microsoft will be here in this free to be list. And we can see that right now it's up 2% today. And ultimately, we could track it to see if there's ever a dip. We can purchase some then, or just, maybe in the future, we're like, hey, let's look at something that's on our list that we don't actually hold yet and purchase some of that. And that's basically it. So Robinhood, like I said, very easy and straightforward platform to get started. If you're new to investing, just don't know where to start, I would recommend Robinhood. If you don't have an account, go ahead and click that affiliate link. You'll get a free share in the process. And then, it's pretty simple. You just link one of your bank accounts with, and then pull in money, transfer in money, and then you can start making trades immediately. Again, anytime you place a trade after hours, it won't execute until the following day and the market's open again, which is pretty standard. There are zero fees associated with transactions, so you don't have to pay any transaction fees. You can buy fractional shares. So if you don't have $4,000 or $3,000 to buy Amazon or Google or something like this, you can buy a piece and then slowly accumulate that amount until you have enough to cover a whole share. Now, when you do want to transfer shares out of Robinhood, or if you ever do want to transfer shares out of Robinhood, you can't transfer fractional shares. So you have to have a complete share in order to be able to transfer it out. So that's something to be aware of. But I don't imagine that'll be an issue. If you could keep all your assets and holdings here in Robinhood, they should be okay. And that's it. You just start building the portfolio. So now we have $100 invested. It's showing that we're already down 3 cents. But again, that's just because of the cryptocurrency market that is fluctuating a little bit. Those other trades have not gone through. Next episode, I'll go ahead and invest another $100, and we can kind of see where we sit. So hopefully we'll have some gain by then. And if not, again, this is something that's long term. Shouldn't be looked at as short-term investments. It's really not beneficial to look at any kind of investing on a short-term basis. These are all for the long haul, so it's going to take some time to get some returns. You might be down 20% one year, but then overall, over a course of 5, 8, 10, 15 years, you'll see that you're actually going to be in a much better place. So guys, if you enjoyed this series and you want to see more of these, make sure you let me know in those comments. Make sure to like this video if you came across it after the live recording. And just, stay tuned. Make sure you're subscribed and turn on those notifications, and we'll see you guys next time.